In this episode, we're talking about the history of acid bubbles, in particular, Tulip Mania. All right. Welcome to this episode of Access Granted. And in this episode, we're going to be talking about one of the most famous acid bubbles of all time, which is Tulip Mania. Acid bubbles have really been a thing of conversations dating back to the early 2000s with the tech bubble. But today we're going to be talking about Tulip Mania, which is one of the most famous bubbles that happened throughout history back in the 1630s. So, Craig, maybe you can tell us a little bit more about Tulip Mania and what happened.
Sure. It's actually widely recognized as one of the first acid bubbles. And, the long story short, basically what happened is in the 17th century, tulips get introduced to the Netherlands, and they become very popular. They were good to grow in that climate, and they had very bright colors. So people started to use them. And when people started to use them, there was a demand for them, and that drove the price up. And it was kind of a perfect storm because at the same time, the Netherlands is becoming a commercial power, really the first modern commercial power, and they were developing financial innovations like futures contracts and things of that nature. And so they started to trade these futures contracts on the tulip bulbs, so you could buy a contract to get delivery of a bulb in the future. And this led to people speculating on them, and eventually the speculation went completely crazy, and to the point where you could buy 5 acres of land with one tulip bulb, or it was the equivalent of 10 times the annual salary of a skilled craftsperson with just one bulb. So that's the level of craziness that can happen with these tulip bulbs, and then eventually it just obviously came crashing down.
Okay, so the parallels between what you just said about the Tulip Mania and what's going on today in certain assets is almost uncanny. So maybe you can talk a little bit about the disconnect of prices between these certain assets and what you're ultimately getting in return for the assets.
Sure. So I mean, whenever you're buying an asset as an investment, you want to identify the intrinsic value of that particular piece of property. And Benjamin Graham in his great work, The Intelligent Investor, talks about Mr. Market. And what Mr. Market is, it's basically a caricature of what the market does on a daily basis. And Mr. Market is a character that he created, and he's a manic depressive, because at times the market can be very positive, in which point they're willing to pay almost any price for anything. And then at the other extreme, it can be almost a manic or a depressive, because the market won't be willing to pay any price for a particular investment. So, the parallels to today are things like, obviously in Bitcoin and in some other in certain stock areas, the price of the coins or the price of the assets is just totally disconnected from the intrinsic value, and it's driven more by the psychology of the market, not the economic value of the particular asset.
Well, Ben Graham was a pretty smart guy. For those who don't know, Warren Buffett's mentor, so I think he knew what he was talking about. So.
Yeah, and I think one of the great quotes that Buffett talks about, and is actually in The Intelligent Investor, is, over the short term, the market is a voting machine, meaning that people's opinions matter a lot more in the short term, but in the long term, the market is a weighing machine, meaning the facts matter in the long term. So the psychology matters short term, but in the long term, the facts matter, and the economic facts.
Right. So you mentioned Bitcoin a little bit there. So getting back to that idea of what intrinsic value is, what's the intrinsic value of Bitcoin?
Yeah. So it's really hard to quantify the intrinsic value of Bitcoin. I think the proponents of it would say, okay, Bitcoin is going to do one of two things for me. It's going to be either usable as a currency, meaning I can actually buy and sell things with it, Or the alternative use would be it's going to be used as a store of value, kind of like people use gold now. There's a lot of people who don't like paper currencies, and there's good reasons not to like paper currencies, so they hold gold as sort of a hedge against that. I would argue that Bitcoin's not really doing a very good job of either of those two uses at this point in time. It's only usable as a currency in very limited circumstances, and it's not really a very good currency because it's very volatile. So I can't be certain that when I go to exchange it for my lunch or something, the value is going to change dramatically even throughout the day. So it's not very practical as a currency. The other major problem with it is in order to be a currency that's widely accepted, it has to be widely accepted, and usually what that means is that there has to be a prime mover or a major user of it to ensure that it's going to be widely used. In Canada and in most countries, the first user is the government, so the government makes you pay your taxes in the currency that they print, and that ensures that it's going to be widely used. So Canadian dollars are widely used because the government basically enforces it. There's no such person with Bitcoin, and there's no real motivation for anybody to step in and be that person. So that's a problem with it becoming a currency. As a store of value, now it gets a little bit more complicated because gold is a store of value because people agree that it is. Bitcoin could be that thing in the future, and there's maybe some good arguments to be made that it could be a good hedge against things like inflation, or it could be just a good store of value where you put money into it and eventually you save money and it stays in there. But again, the volatility is working against you there because it's very volatile, even more volatile than gold. So for me, if I was looking to invest money, I'm not really feeling very good about how much money I'm going to have in the future if it's in Bitcoin. And it's just really hard to quantify what that intrinsic value is. Like, it could be nothing, and it really could be nothing. And so, I think people need to be aware of that when they're paying $10,000, $15,000 plus. You could be buying nothing, and that would be scary to me, and I think it should be scary to anybody who's considering it.
All right, well, there you have it. That's a basic history of asset bubbles. And I think what's really important to remember is that asset bubbles can happen in a variety of different assets: tulip bulbs, Bitcoins, real estate stocks. It does happen. And what's really important is to have a disciplined investment strategy about buying good assets at good prices. So with that, let's close off this episode. Be sure to send us your questions at cgwfamilywealth@nbc.ca. That's our email. Or visit us at cgwfamilywealth.com. Thanks very much for the input. Ready, aim,